Same stocks, same people, growth rate, well, not same stocks because the growth rates were slightly different. Growth rates improve, that's what happens. By the way, the difference between 10 and 20 is 2 times leverage, but forget leverage. It's how sneaky people like me do add extra zip. But even if we don't do leverage, that's it. Now, this is my firm fundamental belief. I can teach anybody to invest because that's your average bloody fund manager. And with my big fat mouth, the Financial Times in 2004 said, prove it. So I did. They did a competition and I won. There you go. Oh, well, that was just lucky. It was just a particular year. Okay, fine. Whatever makes you feel better. Give it to Neil Woodford instead. You know what the markets did? They gave Neil Woodford, who, by the way, that year came 14th in that. Jasper the Cat narrowly beat him, but he had a great brand name. There's the power of the brand. Guess what happened? We knew in the industry he's shit. Right? Guess what happened? They gave him $9 billion. That's the way the industry works. If you're shit, they'll give you more money. Why? Well, it's like unions in Britain in the 1970s. You do not want hardworking people working in a union because they're going to show up everybody else. Same thing in finance. You do not want quality getting money because it'll show up everybody else. Keep it mediocre. Everyone can keep earning fees. Somebody good turns up. Whoa, don't give them money because they're going to show the rest of us up. Essentially 20 to 40 stocks and then the rest in cash. So you might decide to have 10% in cash, 20, 30, 40, 50 in cash. And then whatever's in stocks would be about 20 to 40 stocks equally weighted. Keeps it simple. Keeps it absolutely simple. These are some of the big brands. Why do they use people like me to communicate to their audience and pay us to communicate to their audience? Because I think brands are having a problem communicating with their audience. I think there's a genuine problem that brands have. Barclays, I'm very lucky. They did my book launch. If you'd like a free copy of the book, I'm sorry I've overshot this. That's who I am. I've written 18 books on there. They're in a variety on this. What do I think about crypto? The same thing I think about modern art. Might be worth something, might not be worth anything. I don't know. I know as much about crypto as I do modern art. That's the Goldman Sachs slide on cash return on capital invested, basically cash flow after capital. If you can create a money-making machine, which is literally what cash return on capital invested is, your stock price is likely to get 30% per annum. Okay, that's from the quantum database Goldman Sachs research. The reason I look at data is because what never